Welcome back. I'm Pratap here. Today is the 26th November 2024. In this video, I'm going to evaluate the performance of high liquidity zones generated in the previous report. Even before that, all of you please understand, we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, click on the tab post. Some of you might be seeing the tab community. Click on the tab. You get access to our free training course. This post is having a YouTube playlist link that is having all the training videos. You just click on the link. Now we are into the playlist supply demand zone price action course. In this playlist, you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join in that channel. It will be helpful to you. Now let's get into the analysis discussion. Yesterday we identified 8 high liquidity zones. Even before we look into these high liquidity zones, look into Nifty. Yesterday our software identified, day before yesterday, our software identified this as a high liquidity zone. And yesterday we got a trade. What kind of trade you got? Lower time frame zone as an horizon to the higher time frame zone. Let me go to the 5 minutes time frame. The lesson 22 concept, this is the one. The lower time frame zone as an horizon to this entire high liquidity zone. So today again Nifty gave a trade here. It entered into the zone and then again another 200 points moved down. Exactly similar the way how yesterday's prices came down after reaching this zone. Same thing happened today. That is the power of this lower time frame zone as an horizon to the higher time frame zone. That is what you learned in lesson 22 in our training course. Today Nifty gave you another 7.2% return if you would have taken a trade, another second trade. That's why I always say there is high liquidity zones or lower time frame zone as an horizon to the higher time frame zone. You can take as many possible as a trades. Each time it comes, prices enter into that area, you can trade. Of course, one day the zone gets the expiry date. On that day, the zone will be violated. But until then, you will be enjoying the profits. Because you never know how many times the prices will be testing this zone. So yesterday it tested. Today again it tested. Yesterday after the test, 200 points, the prices came down. Today also again after the test, again another 200 points prices came down. Yesterday it gave you I think around 7.2% ROI. Similar way probably today also you might have got similar kind of ROI. So that's why it's a very powerful concept. And one more example also you will be seeing that I will explain when we go through these zones. But before that, we did not get any trades today. Few stocks are violated and we know those when a zone will be violated. What you learned in lesson 16, when a zone will be violated, the same way. You would have identified these zones, some of these zones will violate and that is what happened today. Let's look into them one by one. The first one is Oberoi Reality. This is a daily high liquidity demand zone. We did not get any trade today. But it is having a fine-tuned 5-minute zone and that is already tested. Friday it gave a test here. Except that we didn't have any planned trades from this zone. But how I fine-tuned, let me explain because this will be learning for people who are currently completed the course and attending these HLQ zones related sessions to improve your concepts. This zone is fine-tuned with 75 minutes time frame. Here we have a 75 minutes. So this is the ERC candle. This ERC candle, this is the one, a drop candle, dynamic view. So 3 base candles rally. This is the 75 minute zone. This 75 minute zone is again fine tuned with 15 minutes time frame. Here we have a 15 minute zone. So this is the failed ERC candle as a leg-in. You have 1, 2, 3, 4, 5 base candles and a rally candle. Here also rally, base rally, but this is already violated. That's why I didn't draw this. Because prices came up to this zone and then moved up. And this 15 minute zone is again fine tuned with 5 minutes time frame. That 5 minute zone is looking like a high liquidity zone because it's tested multiple times. It started here, drop, base, rally. This is the first test, this is the second test. See, the second test prices came deep inside, but look into the third test. Still it gave again a third test last Friday. So here again, Friday also prices came deep inside. Prices moved up and again prices came and again further moved up. Again it looks like this is a failed ERC candle as a leg-in, like a rally candle, base rally. Rally, base rally. From where it is originated? From this high liquidity zone. So again tested. So how long it will be tested, we don't know. As long as these zones prices are entering, we can take until the day the zone will be violated. That is the way we should trade with high liquidity zones, or even lesson 22 concept, lower time frame zone as an horizon. You have seen Nifty. Nifty gave second test today. Yesterday we got a trade. You may ask a question, why we didn't focus on that fine tuning, why we didn't register in the Excel sheet. The reason is, see, Excel sheet, whatever the stocks listed in our by the software, stocks near demand and supply zones. Nifty was not there in the list, our yesterday's list. So that's the reason why I didn't log the details in the Excel sheet. But the point, you need to understand high liquidity zones and lower time frame zone as an horizon to higher time frame zone. Whenever prices are entering, they will be giving you trade opportunities. Whether stocks near the zones or not, still they will be, irrespective of that, they will be providing you trade opportunities. That's why they give good, whenever they are there, such kind of things are there, even stocks not near to the zone, still you can plan trades. Of course, sometimes they might be violated, but still they will be giving you good trade opportunities. Okay, next Muthoot Finance. This is also a daily high liquidity supply zone. Already we discussed this. We didn't plan any trade in this zone. Already I explained it. It didn't have a proper structure in 15 minutes time frame. We have only 75. Today's prices came to that 75 and came down. There could be other reasons why prices are prices. You might think that we missed a trade opportunity here. But sometimes prices will, actually this zone has to be violated. It didn't happen. Go to the 75 minute zone. This is a drop, base, drop we drawn already. But we didn't fine tune this because 15 minute structure is not really good here. The structure, price structure, see here, very bad structure. But why prices came from this zone? Maybe institutions created a new order flow today. See here, 15 minutes rally, 2 base candles, drop, follow through candle. Next time when prices are entering into this area, we may get trade opportunity. Today there is no retracement today till this zone. Maybe next time again when our software list, at the time you can draw a zone like this. A rally based drop. If this is having a fine-tuned 5-minute zone, next time you can plan a trade. Is it having any proper fine-tuned 5-minute structure? So this is maybe a drop 1, 2, 3, 4, 5, 6, 7 base candles. Drop with pro gap. Because the number of candles are more, next time also you can't plan a trade in this zone. Because you have more candles in this zone, base candles. Maybe there is a pro gap, there could be some order flow, strong order in this area. That's why prices moved sharply today. But the zone structure is not clear, so we don't take any additional risk. We focus on the other stocks. See, always when you have some doubts on some zones, leave them. Even if they may be a successful trade next time, don't worry about that. Every time you won't get successful trades. When zone structures are there, at least 90% of the times zones will be violated. Just because of the 10% success rate, you can't take 90% risk. Okay, anyway, Muthoot Finance, we didn't plan any trade. Next time also definitely we don't plan in this zone. So this is the daily zone. Next one is Coromandel. Coromandel is also daily supply. This is 75-minute supply zone. Coromandel. See, this zone is violated today. Actually pierced. But we know that this zone will be violated. Why? Because the structure is not clear in this zone. This is the 75-minute zone. Sorry, 75 minutes. See, this is the failed ERC candle as a leg-in base rally. This is how? This is like a drop base rally. Look into the 15 minutes time frame. Structure is not clear in the 15 minutes time frame. See here. Very ugly structure here. No base candles. So many candles. A lot of consolidation. Such kind of zones. So easily violated today. But here, drop to base candles rally, lower time frame zone as an horizon to the higher time frame zone. You may feel like there could be some order flow here. Right? But still this is not a good order flow because the confirmation you get in 5 minutes time frame. Look into the 5 minutes time frame in this area. You will understand. Here also see you have a drop, you have base candle 1, 2, 3, 4, 5, 6, 7. It's again the price action is not good in this area. Then all of a sudden it looks like with a pro gap prices entered into this area. Next time prices came and picked up the orders from the zone and again high liquidity zone is created. That kind of impression it is created earlier when you look into the 15 minutes time frame. But actually, the reason why it is created is because of this drop base rally. But unfortunately, this drop base rally and follow through candles are not based on the fine-tuned zones. Maybe some order flow is there. That order flow is already tested here in this area. See here, in case if you draw drop base rally, already tested. Maybe first time it is tested, second time a little below it went, and today it is violated. Actually today also at some point of time it has given some move from this high liquidity zone. And a high liquidity zone point of view, if you plan a trade, you can't take this trade because it doesn't have RR, proper RR. Let me show you. even if you draw by considering this is a high liquidity zone, and if you are planning an aggressive trade setup in case. See, today it gave some move. Till 5 minutes level it reached. But RR is not good. So where you need to plan your trade, this is the one. This should be the target supply zone. 15-minute supply zone. See, it gave an entry and reached the 15 minutes supply zone actually. After that again prices came, this time it is violated. Even earlier also prices came, see, very came to this zone and sharply prices moved up. But okay, this is the real entry. This probably you will be missing because already risk is high in this zone. You can't plan any entry buffers here. Let me show you how much RR it is having. Long position, some stop buffer, approximately I am adding some stop buffer here. In this zone you are taking a trade, and this is your target. See, you are getting 1:1.59. Sometimes what you do for managing the risk point of view, you do adjustment. You reduce this entry until you got 1:3 RR. In case if you would have planned like this, yeah, 1:3. See, slightly before this, you missed the trade. Prices came very close to this, but exactly you are waiting on this. You can't add any entry buffer because this is the area when the prices reaches, then only. See, it should reach here in this line. Then only you get 1:3 RR. If you add entry buffer, you won't get 1:3 RR. That way also slightly you might have missed the trade. But it reached the target, and again target pushed the prices down. And ultimately this is the time the zone is violated. Because several tests, obviously order flow might have been consumed. This time it is violated. But see here, it has given a successful trade. I mean, reached the target. But the reason why we can't accept the trade is not having sufficient RR risk reward. Even if you further fine tune, going inside the deep and fine tune, you might have missed the trade, that one. So this is again another test. After that prices moved up. 5 minutes it is much clear. See it, prices came into the zone. Slightly you missed 1:3 RR. Price didn't reach. After that sharply prices moved and reached the 15 minutes target. Okay, because prices move, maybe if you would have adjusted up to this 5 minutes order flow level, maybe you might have got the RR, but such kind of things we know, okay, possibility is there only after the price action completes. When you are taking the trades in the live market, such kind of calculations won't happen. See, because it reached this, prices went, it looks like more than 1:3 RR. But while planning, you can't plan. Many times what you think, it just reach this zone and again it will move up, move down. While planning, your mindset is different. And after price action, your way of understanding is different. So that's why always in practical way, you need to think when you are planning your trades. Anyway, why we didn't plan this trade is because RR is not sufficient. If this is an aggressive trade setup based on the high liquidity zones. But remember, this is not a fine-tuned zone. Why not fine-tuned zone? Because 15-minute structure is very ugly. Okay. Anyway, the zone is violated today. This is about Coromandel. See, we don't, and one more thing, we don't know this is a high liquidity zone. We are only guessing. It's a guess. This drop-based rally could be high liquidity because multiple times it is tested. Actually, how many times? 2 times only it tested. Today, 3rd time tested. Or actually, it is like a tested zone, drop-based rally. After today's test, thought this could be a high liquidity zone because multiple times, 3 times already tested. It is just a guess. So that is the reason why I didn't focus on this particular drop-based rally. The reason is there is no that is not a fine-tuned zone. 15-minute structure clearly says mostly this zone will be violated. That is what happened. Okay, next one is ICICI Prudential. This is also a 75 minutes high liquidity zone. And here, this is the zone software suggested. But this is the one yesterday we discussed. ICICI Prudential. Why? This is a rally, 3 base candles and a drop. This is the 75 minutes high liquidity supply zone. And this supply zone looks like it is the zone is violated because there is a pierced, but this zone is having an horizon, 5 minutes horizon. That is the responsible for the entire creation of the 75 minute zone. Yesterday it gave a good trade for us. We discussed this trade. See today, again 2 trades it gave from the same zone. This is the first trade, this is the second trade. We have seen Nifty. Nifty gave a trade today. Exactly similar way, ICICI Prudential also prices reached today and gave 2 trades. Go to the 5 minutes, you get better clarity. This is yesterday's trade. Yesterday prices came very deep into this zone, distal line. Generally, when prices went deep, we don't dare to take the trade. Maybe institutions added a new order flow. Why institutions added new order flow? How can we say? Because you are seeing here, this is a ERC candle, again a base candle, drop candle, that kind of structure it is looking. Or a rally, 2 base candles, drop. But this is easy ERC candle, I'm not considering. But when prices are coming down, definitely new orders they might have added, who knows? That could be the reason why again today it worked. Even second time it worked. See, this is the first test today and reached up to this. Yesterday we have drawn this blue color line as the target yesterday. Till that level it reached today. Again second test. Again till that level it reached. I think from here to here yesterday we got 4 yesterday from here to blue color line we got 4. Maybe from here, definitely maybe you might have got a 5% ROA, more than 5%. Anyway, I'm not considering these trades, but I'm trying to tell you the importance of the concept you learned in lesson 22. Because the lesson 22 concept, lower time frame zone as an horizon to the higher time frame, is a new concept I developed. That's why people already using the supply demand zone for the last 3 years or 5 years or 10 years. It's not easy for them to accept the concept until they see a good success in that concept. That's why I'm trying to promote that concept. I have to do that. Because it is a new concept I developed and this concept is giving successful trades. Each time it is giving successful trades, I have to talk about that. It is my responsibility. That is the reason why I talked about Nifty, even though it is not in our today's list. This is also not in the today's list, this supply zone, but demand zone is there in the list. This is the high liquidity demand zone, stocks near. But today price didn't enter into this zone, and structure is also not good. That's why I didn't fine tune this zone. But who gave the trades today? This supply zone. The 75-minute supply zone, which is having the horizon. That horizon has given actually 75-minute supply zone. The point of view, it is a pierced zone. But horizon is not pierced. Prices went deep inside till the distal line. And today again gave, this is the first trade and this is the second trade. 75 minutes candles. That is the power of lower time frame zone as an horizon to the higher time frame zone. Okay, what about this today's software point of view? This is a failed ERC candle, considered as a drop candle, and two base candles, and it is considered as a drop base rally. That's why we have drawn till this distal line. Otherwise, we would have drawn our zone like this. That's why it's looking like a very big zone. But when I went to the 15 minutes into this zone, see the structure is not at all good. You may say drop base rally. No, this is a medium size leg candle. That's why, see, don't, see, sometimes you may compromise. Drop base rally, this is not a valid zone, leg out. Maybe this is the area, maybe some order flow might be there. That way you think, and you can draw a zone like this. Then you say this is a compromised zone. Why compromised? Because the leg out is not really great. Still we have drawn this zone, believing in this area some order flow might be there. That way you go and look into the 5-minute zones. And 5-minute zone structure is not at all good. Very bad structure. And 5 minutes zone, you can't draw the compromised zones. 5 minutes. Higher time frame you can accept at some extent, but not over 5 minutes, because that is the area we are looking for your actual order flow. You should have a good structure here. You got it? Already I explained a concept about compromised zone. We have a lesson, dedicated lesson in our HLQ zones. I think probably I might have added that lesson in the important strategies and analysis playlist. All important HLQ zone videos I am adding into that playlist. Not every video I am adding, important videos I am adding. That's why those who completed the course and studying these HLQ zones, you can look into those concepts, important strategies and analysis videos. In that playlist, complete all the videos, because some new concepts also explained. New concept means whenever I look into the chart related to the concept, I can give you the explanation. That way, important videos I'm adding into that playlist. Anyway, I'm just deleting this. I don't have any interest on this zone. Anyway, today prices also did not enter into this zone. Next one is Ultratech Cement. This is a 75 minutes high liquidity demand zone. See, this zone is violated. We know this zone will be violated. Very easily you can tell this zone is violated. Why? Go to the 15 minutes, you will understand. We have a rally-based drop is there. Actually, we need to have a rally-based rally, not drop. So no proper order flow. We know that this zone will be violated. It is what happened. Easily. And drop candle and rally candle, and in between no base candles. The good thing is we land a concept when a zone will be violated. That way, many trades you will be able to save. Many people don't know when a zone will be violated. When our zones, blindly they take the trades. How many stop losses we avoided with the concept lesson 16 when a zone will be violated. Because you learn that concept, So many stop losses you avoided because we didn't plan our trades. We know that the zone will be violated. Many such kind of zones we identify. Without knowing the concept, people will take the trades in the zones and zone will be violated. And this is another 75-minute zone. This is also drop base drop. It looks like it gave a good trade. Okay, but unfortunately, while fine tuning, I didn't feel a proper structure to plan the trade in this. But otherwise, it looks like prices entered and came down. It gave a good profit. It is creating a feeling like that. Now look into this. It happens rarely, such kind of price actions. We expect zone will be violated. That didn't happen on that day. Maybe next time it will be violated, maybe tomorrow. Okay, go to the 15-minute structure. 15-minute structure is not good here. See, it looks like there is a leg out candle here. Maybe you can draw a base. I'm not convinced with this as a base candle. Maybe this can be, I can convince this, at least I can compromise on this candle and I can call this as a leg-in candle. Failed ERC, definitely it is a leg-in. But I am not really convinced this is a base candle because it is all looking like a medium size leg candle. At least before that there should be a base candle. Even if you compromise and draw this zone. Drop base drop. See, it is already tested here. There is you can find a 5-minute zone definitely in that area. See here you have a drop, base, drop, follow through candles. So definitely you can draw a zone like this. Exactly the zone will fit within this high liquidity zone. Still it is a tested zone. Because it is a tested zone, you can't plan any trade in this zone. That way also you can say this zone will be violated next time. That is what happened. It is violated. Easily violated today. Again, you may feel this is there is a leg out. Definitely there could be a base. That is what I am saying. See here all these candles, I am thinking they could be medium size leg candles. That's why I don't want to take any extra risk. See, when I get so many stocks for one, the structure is not clear, I don't want to take additional risk. And moreover, it is a 5-minute zone. 5-minute zones I can't compromise. 15 minutes at least, see here, we can compromise and draw the zone. 15 minutes, go to the 15 minutes. Even though I am not really convinced here, at least some compromise and we can draw this zone. But 5 minutes level you can't compromise. Okay, it looks like a drop base drop. This is valid. But why I didn't draw? Because in this candle already it is violated. Drop base drop is already violated. It is, the zone is pierced. So that means this entire order flow is consumed. Moreover, it is already tested in this candle. And that's why easily in this candle it is violated. So where is my 15-minute structure here to draw the 5-minute zone? See today, the zone is created and again a drop candle, rally candle. See, this is a drop, failed ERC, drop, drop, again rally, drop, again a base candle, rally, and prices were moving there. So we are looking for a supply zones, not demand zones. Inside a supply zone, higher time frame supply zone, we need lower time frame supply zone, but not lower time frame demand zone. This is a drop based rally. We are looking for either drop based drop or rally based drop. So that's why this price action today, maybe due to some reason prices came down here. Maybe there could be some other reasons behind that. but not as per our actual order flow, finding these order flow related concepts. So that is the reason why I didn't show any interest on this zone. I know this zone will be violated, but unfortunately that didn't happen. Such kind of things rarely it happen. Just because of this rare case, if you consider, see how many other zones violated earlier. We discussed the other zones, they're all violated. How, otherwise you would not have ignored those stocks. If you consider just a rare scenario like this, why it came down, why it gave an entry. Actually it looks like it gave an entry, but not as per our fine-tuned zones. So that's why I didn't plan any trade. According to me, Canara Bank should be violated. Okay, next one is Divi's Lab. This is again another 75 minutes high liquidity supply zone. This is the one. Sorry, 75 minutes zone. Software identified this one. Drop, 2 base candles and again a drop. This is a failed ERC candle as a leg in, 2 base candles and a drop. This 75 minute zone. This 75 minute zone is having a fine-tuned order flow. Let's go to the 15 minutes time frame. It is having a 15 minute zone here. Forget about what is this, I will come back to this. Here we have a drop, 1, 2, 3, 4 base candles and again a drop. Drop, base, drop. So this 15 minutes we have drawn. Within these base candles, this is the zone. Within this zone, again we have a fine-tuned 5-minute zone. This is the one. Drop, failed ERC candle as a leg in. You have a base candle. Again you have a drop candle. See, this is not a rally candle. This is a failed ERC. Rally means big. You should have at least more than at least if 75, if not 75, at least more than 50% body should be there. So failed ERC candle, you should not consider the body. You should only look into the dynamic view. Dynamically prices are moving down or moving up. That is only you have to see. That way it is a drop and base and drop. So we have a fine-tuned zone here. But what is this zone? This is a drop, base, a drop. Previously we have drawn this drop, base, drop is the horizon for this entire daily zone. We have a daily zone here. This is the daily supply zone. So this is the failed ERC candle as a leg in. You have 3 base candles and then a drop candle. And in this zone, previously I have explained this. Yesterday it was not there, stocks near the zone. I think 2 days back, maybe Friday or Wednesday videos, maybe Wednesday or Thursday videos, it might have resulted as a stocks near the zone. We would have discussed on Wednesday or Thursday video about Divi's Lab. At the time I already explained, this zone is having a fine-tuned 5-minute zone, sorry, not fine-tuned, the 5-minute zone as an horizon to this entire daily high liquidity supply zone. This drop, base, drop, at the time we have drawn. Drop, base, drop. And it took the order flow from this zone and this entire daily zone is created. That is what I explained. And yesterday what happened? You may ask a question, why we didn't discuss this stock yesterday? The reason is this is not listed stocks near the supply zones. But 5-minute zones work very well. Whether it is near or not near, they work. 5-minute zone as an horizon, the lesson 22 concept works. Like how it worked for Nifty, exactly the same way. And go to this daily zone. See what happened yesterday. Yesterday prices entered into the zone, picked up the orders and sharply came down. Let me go to the 5 minutes now. See, this is it picked up the orders yesterday. But when it picked up the orders, see the candle timing. Yesterday at 15:20 candle, just 10 minutes before market closes, it entered into the zone and then sharply prices came down. Till rally-based rally, it has given a profit yesterday, maybe intraday profit, the 5-minute zone, last 10 minutes. And a continuation to yesterday's price action, today further prices moved down, 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 down. Why? Because of this effect. Price entered into this area and this order flow continuously pushed. That kind of price action institutions have taken. Until this 5-minute zone as an horizon is violated, the prices won't enter into this 75 minutes fine-tuned 5-minute zone. Until then the prices won't enter. First this has to be violated. When this will be violated, we don't know, because the 5-minute zone as an horizon to the higher time frame zone will always give multiple tests. One day it will be violated, the order flow will be consumed, the day it will be violated. Until then, you take the profits. See, yesterday the stock is not listed near the zone, still it gave an entry during the last minute. And continuation to that, today prices came down. For intraday traders, it is not a trade at all. But short-term traders, maybe yesterday, before market closes, maybe they might have taken a trade and they might have holded, and today it further pushed the prices. Many times we observed these 5-minute zone as an horizon, they are pushing very good. At least 2 or 3 days it is pushing the prices. See, till the 15-minute zone it reached today. Here we have a 15-minute zone and then rally candle. Till there it pushed the prices. But trade should be yesterday, and if you should have holded today and then it reached. But intraday traders, it is not possible. But what I am trying to say here, trying to tell you the power of the lower time frame zone as an horizon to the higher time frame zone. See how many examples you got. Lower time frame zone as an horizon to the higher time frame zone. In all these stocks, the price action looks like a successful trades. Maybe during the intraday or maybe holding for the short term, whatever it is. So because of this lower time frame zone as an horizon, our prices did not enter into our 75 minutes. You may ask a question, how it is identified, stocks near? Because yesterday prices closed inside this daily high liquidity zone. See, this is the candle. Let me go to the 5 minutes time frame. This is the close yesterday. And this close is near to the 75-minute zone. That's why software listed. But who is preventing the prices to enter into our 75-minute zone? This 5-minute zone, horizon to the daily zone, is preventing the prices to enter into 75-minute zone. So that's why getting trade in the 75-minute zone may not be easy until this horizon should be violated. Okay, this is about Divi slab, and the last one is NTPC. NTPC is also 75 minutes high liquidity supply zone. It is also having a fine-tuned zone, but today prices did not enter. So go to the 15 minutes time frame. In the 15 minutes time frame, here price structures are not good. But here, yesterday, prices entered into the zone. They created a drop. A drop, 1, 2, 3, 4, 5 base candles, and again a drop candle. Drop, base, drop. This is the 15 minutes fine-tuned zone. Within this 15 minutes, we have a 5 minutes fine-tuned zone. Here we have a rally-based drop and follow-through candles. This is the fine-tuned 5 minute zone. but today prices didn't enter into the zone. See, this is today's candle. Next time in the retracement, probably it may. Now prices are moving down. So these are the high liquidity zones identified in the previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.